I've been speaking the entire time, you guys. How come no one said anything? Why do you guys do that? I was saying, well, good thing is I typed it all out. But anyway, I was saying that this area here is pretty constructive. So 68.46, 68.47, that's our 256 point range. If they want to sustain this area, they definitely can. Um, I would consider holds off this range bullish, but not necessarily bullish, but at least like an odd for an entry around 6846, 48, 49, 50, 52 for the retest of 68, 64. So like I said earlier, they're not going to break either end until either they give us a constructive break over 6878 or a break beneath 6846. The median point's kind of around 6865, 64. Does that make sense? So I took a short trade off 6868, which was a little bit late, to be honest, because I would have preferred entries closer to probably the 7-1 spot, like probably closer to this range in here. Kind of like this, probably this area in here, around 7172. I entered closer to this range in here when they kind of delayed a little bit. And we already had our morning long. So like the morning long was pretty straightforward back to our spots. They did a really good job last night holding 6788, 6799, 6791. So you guys can see that they held the bear zone pretty nicely. We did open in a neutral range, which could be another reason why they're stalling a little bit here. There's also the JPM collar, and I feel like that's partially why we have alignment around 6840 on SPX. So 6840 SPX, I'm pretty sure, is very, very, very close to being, so that, what is that, 6836? That's very close to being our 6878, 6881. Does that make sense? So alignment on this area here is also the JPM collar, and that's also our 346 point interval. So JPM collar of 6840 SPX is also here. So there's confluence on that range there too. So we basically won't see any real directional movement unless it's beneath 46 or 256 point ranges off the weekly open. And that could give us odds of getting back. I figured closer to like 68, 22, 28, 32, this range in here. Or we'd have odds of getting back to the 6878. Anything in between right here is pinnable price action. Does that make sense, you guys? I don't know if that makes sense to you guys, but pinnable price action means like market's already met its accepted price points or price range, so it doesn't really owe us anything above or below that. Okay, so these areas here, and we've talked about them quite a bit. Where is it? Hold on. These areas here, okay? So these areas are huge, and we've already discussed how important these spots are. So you have to also remember too that the market doesn't owe us anything. Like if it's already hit its accepted price points, we're not owed anything above or below that. Does that make sense? So if they want to pin it there, then they absolutely can. Does that mean that we can't extend price above here? No, like there's definitely odds that they could push, you know, to our 6881, 84, maybe enter the zone, but I do think that they'd have to have some sort of constructive breaks above 66, 71, 78 in order for that to happen. But if they want to keep it pinnable within this box range here, they for sure could. So two ways you could trade this is, like I said earlier, the longs off 68.46 or 52, or the shorts from earlier. Ideally, I would say above 6871. I was a little bit later than that. So we're hedged both ways right now. I had my initial long this morning. From, I think, the initial long I took, I kind of waited a bit this morning because they didn't clear 6.8. I don't know if you guys see this. You see this morning how they ended up stalling 68.22 right here? Do you guys see that? This allowed me to wait a little bit. Okay, so I didn't enter right away this morning. I kind of waited to see how they react around 6822. And then mainly because we closed neutral. So closing neutral meant that we were still at risk of this area here. Okay, so the yellow ranges, because that's where we closed yesterday and that's where we opened. So I figured they'll probably back test this range a little bit. I took a first small entry around 68.06 and then I added around 68.20 once they finally cleared. So I don't know if you guys can see this. Like once they finally brought it back above here, like in here, it's one of those things where I would rather buy a little bit higher and be on the safe side than have bought a bit lower and then had it fully reversed, if that makes sense. So I kind of scaled in a little bit here and then added mostly in here, okay, on this range break in here, because they could have also failed 68.29 and then brought it back down. Okay, so I didn't want to be too early on that. And the main condition was that they snapped through 6836, 3846, and you can see how they stalled our calculated spots at 6846 back here. Do you guys see that? And right in here, okay, but then they held 6832. This was a very constructive hold right here, okay, this area in here, pushing it to 68.52 and 54, and you can see the single stick breaks to 6871. Like this was extremely obvious, and that just kind of suffices that our ranges are for sure calculated, and those are indeed like the big overhead areas. Like you can see the liquidity and movement at 6871 the very first time it triggered. Do you see that? Do you guys see how it accumulated volume down here too? Okay, and then they initially stalled. So that's where I took my bigger cover in here. And I didn't take a short right away because I did want to see how it reacted to 68.52, 54, 58. You can see that they did a decent job trying to sustain. Let me just mark 68 on here. Hold on. This is my newer template, so I deleted quite a bit. Okay, you can see how they started stalling initially, and there was no closing price over 7.1, so I figured that's probably why they're going to bring this back down a bit and consolidate in the means, which they did. They still did a really good job sustaining though, until they finally brought it back, broke 7.1. You can see the structural holds here above 6.6, 6.8. And where did we even end up stalling this morning? 7.4 and 7.6. So we're still a little bit off. And I noticed that the reason why this is equal on both ends, you guys, is because if we have odds of getting to here, this area is the calculated spot. It's like roughly 2.25, 1.75 to 2.25 points, okay? It's almost the exact same range differential, 246. Does that make sense? Like to the 68.46, 68.47 price point. So this is perfect PA for pinnable price action. Does that make sense? They've left basically like 2 points on each side. Both ends break range or give us odds of breaking range. This is how you contribute to basically pinnable price action at calculated price points. Do you guys have any questions on the morning session, overnight session? From a structural basis too, this is also a really nice cup and handle base. Like I think they did a pretty good job in terms of that. Our timing was also for the 9th high. What? And even this right here so far is forming like a really nice base. So we'll see. I did have some odds around, I think it was around 321. Let me just double check. This is what I was just telling Eddie in there because I think he came in kind of late. But basically, if you missed any short entries around 68, 68, 68, 71, you could definitely have a long entry around the 6848, 6852 area with a very tight stop because it's very close, obviously, to that 6846 range. But I feel like they have a really good probability of keeping this pinnable for the session today. So most of the lows overnight too occurred during London session, so that's another reason why they could likely push highs after the bell versus during real time, but like if they want to continue. But either way, we had a really good day, so any short continuation is honestly more of like a bonus or just managing the trade. But I personally would much rather they pin this in our core spots because that's what's going to set us up for the odds to continue to 69.20s, okay, by the 13th or even as early as Friday. So we'll see. So far, this is panning out to be true. I figure there's probably going to be some overhead around 6.5, 6.6, basically just beneath that 6.8 range, because I think that until they break over 6.8, this is likely still going to have some back and forth price action, and that's usually how pinnable price action is it kind of just gets stuck in between. But so 140, anything aligned with high of day today is, you could use 10, 20, 59-minute intervals. Let's see. So this is stuck in an inside bar. This would probably be the more riskier type of structure. So you have 1, 2, 3, fourth bar exhausted. Do you guys see this? 239 and then 338. So some of these odds are a little bit late, but this is why. So fourth bar exhaustion risk at 1:40 p.m., which is highs. That flips over at 3:38 p.m. And we'd be looking to see if that makes a negation, stays stuck inside, or a 3-bar down. Okay, 3-bar down is what would put us at the bigger risk. Okay, so just under an hour. I haven't really checked to see what the hourly looks like, but I think the 59 looks a little bit cleaner. And then you can also kind of just take a small peek at, what was it? Some of the wider ranges. So like you see how this could flag up. So they're kind of inverse one another because one could flag down and one could flag up. But it makes sense because these ranges should keep us in a tighter box. Does that make sense? Like these ranges should act as like a pinnable type of range, like a range bound sort of box, because that's where they want to close the market. So to me that makes sense that they would struggle a little bit there or keep it a bit sideways. Some of these run all the way till the close though. So some of the earlier morning breaks that we had, so some of the like down back in here around like early morning, or like back in here, I didn't really quite look at the real time range, but like these were like closer to like 5 a.m. I figured a lot of these honestly, they're just flagging, but they're also stuck. So this could easily be an outside bar, so this could engulf. This flips at 4. So this is what could make us durational till close, okay? So the 5 a.m. candles, aka overnight lows, are linked to durational till end of session, but that would require pretty strong movement into the close. Does that make sense? You guys, can you give me feedback on that? Sometimes I feel like explaining structure is a little bit difficult because it's not the simplest thing, but it's kind of a way of understanding how this could pan out. So in terms of lows, okay, during these periods, and in terms of highs, I guess we could even look for like the ones that are more correlated to like 5 a.m. and 10:40, or 5 a.m. and like 1:40, but there wasn't really any that's like exactly direct there. But most of these are after. I would imagine it would be like, yeah, like the 118, but these are, they're not as aligned with lows, but that makes sense because it's conflicted. Yesterday, lows and highs were aligned, so timing was very, very, very calculated. Whereas today, it's not as aligned, so it could be a little bit trickier to nail like the exact point. But I figured that we should start seeing some actual breaks around the 321 to 324 period. So we'll see if there's any sort of like progressive direction. So far 321's trying to come back and back test 5.8. 338 was one of the major flips this afternoon, and then we had those durations till 4. So that duration being till 4 o'clock is interesting because that would include the final minute of the session today. And if we want to look at this from like a real-time basis, like we hit lows close to like 10:30, 10:48. Does that make sense, you guys? So like think about it from like the time that we hit morning lows in here, okay? There is some correlation going back to, where was it? To here. Okay, do you see this? Like around the 5 a.m. window, 10:30 window. A lot of these are, let me just clear the chart so you can see what I'm talking about. A lot of these are kind of linked to one another. Okay, so kind of like these morning lows kind of in here. And that's not the exact frame, I'm just giving you guys an idea to like these morning lows. So only reason I'm looking at this one is because it closes right at 4, but I guess some of these could be a little bit more accurate. This morning's range would be probably closer to like to here. Okay, and you can see, okay, like 5:04 a.m., 10:36 a.m., 1:22, 6:08, or 4:08. So some of these are after the bell, but you can see how these correlate right to like this morning's lows, overnight lows. Some of the wider time frames too are don't flip until tomorrow. So a lot of these are durational, basically from real time till session close, which I think makes sense considering we don't really have as much odds in real time. And that usually happens when does that usually happen? When like odds are a little bit reduced in real time and usually pushed out to either right at end of session or into session close or whatever the case is. And specifically if you're aligned with your lows to your highs. Do you see what I'm saying, you guys? Like a lot of these in terms of overnight to real time, okay, pay attention. They don't really line up for real time. They're kind of like right into the close. So technically, since like SPY contracts close at 4:15, maybe like a 4:14, 4:12 break based on that, but a lot of these odds are aligned that they wouldn't really give us the highest odds in real time. And that is usually what kind of price action? What kind of price action is that usually when they do things like that? Yeah, that's usually when it's pinnable. And to me, that makes sense. So 321 trying to hold there. That was kind of the first window to see if they'd give a retest. So 68.58 structural hold. I would say that the condition, since there's multi flips at 338, is you probably want to see if they can try retesting or tagging 6868 by the 338 window, would be the condition, in order to have like some sort of a structure break. You probably would want that before 338 though, so like probably closer to like the 330, 336, 335 window. How did you guys do today on the session in general? And I feel like this window here is probably going to give us the final probability in terms if they're going to keep this stuck and pinnable or if they're going to try to reattempt downside. Because what was that one time frame we looked at, the 59-minute? This is the only frame that's linked to highs that could put us at some risk into the close, you guys. Okay, so like this frame here is the only one that I think, if they really wanted to push back and recycle ranges into the end of the week, which is very possible if they want these to be max ranges, is 68.71, 68.76 enough to be considered max range for the week this week, based on everything we've discussed? Yeah, I would think so for the week. 309 points. I mean, sure, like we could push our 346, but I think that's enough for them to consider it max range if they wanted to stall. Do you know what I'm saying? Oh. But yeah, it is Thursday, but I'm saying if they want to just kind of pin the end of the week, because our period is between the 8th till the 13th, right? So we still have Monday. So if they don't want to do it all in one shot, then they could easily recycle this and kind of just make it pinnable into the Friday session. Plus, when you factor in like the JPM color too, the 2-day also flips tomorrow. That's our first flip on the 2-day bull structure. Okay, so, and sometimes when you see flag flips like this would be a flag flipping over. They can stall. Okay, so, and sometimes you can see that like come down into the bar and then come back up before the 14th. So that's another factor that I think could come into play. When I looked at it from like the mid-bar measurements booth, even though we haven't hit 346 points on the week, from like mid-bar lows, we've hit 372 to 300. The 375 point is exactly around our 6.8, 7.8 spot. So it just adds even more confluence to our areas, because normally when you break 346 points, you almost always push around 375 to 380. Okay, just use that as like a general rule. But whereas like from these midpoints here, you're right, like we're still kind of within that threshold. But I wonder if that's if they want to keep this closer to like maybe pinning around 256 points. Do you get what I'm saying? And that would pin us in the channel. If they did something like this, then maybe they just want to keep us channel bound to end the week or something, or zone bound, or whatever the case is. Off the top of the flag, so off of here, like where the pull started, right here, I think we're stalling 256. Oh, like just barely. Do you see that? So these are very, very calculated areas for us. So not full range, you're right. Like these are not full range, but they're definitely enough to be considered potential max range for the week. Okay, off these midpoints. So off the mid bar, which by the way, I love measuring off mid bars. I find them the most accurate. Like these mid bars in here, 6874. Okay, would be would be 256 points. Okay, off the mid bar. So right in here. So yeah, that it is quite a bit of overhead in this range in here. And like I said, I feel like I always find it helpful too that when you get clear clearance breaks, it's usually when you start snapping the full bar. Okay, so like that would be like 6909, 6902, which is also why we could maybe struggle a little bit in the neutral ranges. 69.19. Do you see how these areas are linked to our 69.19, 69.22, 69.28? Hopefully you guys can see those. This is linked to 6944. But basically on a wider basis, it takes us back to the mid-supply in here, which is this area right here, okay? And that's all for 10-day. And that's basically where we're trying to nest back in. Can you stay nested in a mid-supply for a long duration of time? Kind of like this. So could we end up hitting these ranges but then get stuck in an inside bar for a period of 10 days? If they wanted to, yes they could. Okay, so this could end up resulting in staying stuck from the 14th to the 28th. If they decided that they kind of wanted to calm down a little bit. Do we have odds to retest highs or even 6971, 6988 as early as the 14th? Yes, right? A lot of that though is going to be based on what they do into the closing price point this week. Let's go back. These are really good moves, guys, back to 68.71 and specifically ahead of 338, which puts us at a pretty good odd of retesting highs as early as that point in the day. Because remember, these points are linked to the high of day. So I felt like if you set conditions specifically around 330, 332, 334, 36 during imbalance prints and right back to this box range in here, I would say that this is giving decent odds of getting back to retest highs by the 338 period. What do you guys think? And we're targeting this range in here. These are our extremely calculated spots at 68.78 and 68.81. Eddie, did you try doing a long? I know you missed like the earlier entry. I don't know if you jumped in short too late. You definitely don't want to be doing any shorts around beneath 6868, okay? Or even, I guess 6864, 65 is okay, but you're still a little bit in a tough spot there, especially if they make this pinnable, because they could. If they end up, I would say if they stall this range in here at this time, guys, then they will make this pinnable, and they'll continue to delay getting these ranges until end of session or into the after hours. Does that make sense? So like if they stall here, let's say they meet where do they stall? Okay, so they tagged 6871. Okay, do you see that right here? But no closing points above it. So your condition is usually you have to close above in order to break above. Any reductions that they have during this period are likely what the max ranges for the session would be. So far they've already reduced about 5 points. So let's see how many points above these ranges would 5 points be? I would imagine it probably leads to highs. Yeah, it does. Okay, do you see what I'm saying? Like off these reduction points here, these usually are gonna be the calculated reduction points are typically what the max ranges would be or what could have happened. So 5 points reduction I would imagine has led to 6876. Okay, from the closing point back to 6874, which would be here. Do you see what I'm saying? So let me just mark these, so because those would be our conditions on if and when they break highs, they'd have to clear 6874.75 and then take out 6876.25. So let's see what price point we close at during this period here. I would say 68.71 would be the absolute minimum. Otherwise, that's going to keep us delayed until the close and keep us within this pinnable box range, which I figured is likely the highest probability. All I really want to do today is pin in this area here. So it doesn't really do anything for us, but at least we know what the ranges are. Okay, so that's still a bonus. And the timing of like when they can start pushing or moving price. I did feel like they moved this a tiny bit too early, but because usually if you move a little too early, it gives you odds of doing what? What happens when you move a little bit too early? So I would much rather that they did this break right here, okay, to 7-1, probably closer to like 334, 35, 36. Why is it an issue if they move price a bit too early sometimes? Well, yeah, using up range, but more so I would say that it still leaves time for risk back to the downside, right? Because if which makes it a little bit harder to align time and price at the exact point. So let's see here. I would say the 37 stick. This would be the final minute ahead of the flip. So these points here would be very, very important to see. Closing price point. I would say minimum 686825, ideally 6871. Okay, for this 337, 338 periods, because these intervals are what could keep us basically extended till close. Overall, though, this was a very calculated move, and I think played out pretty well. If they would have broken downside, I think the reason why that would have been maybe a bit better is because it would give us more of a range for day trading, but that's it. It wouldn't have really benefited us though in the sense of where we close. Does that make sense? That if anything, that would just delay price action through next week, but it would have given us a better real-time trade. And you can think of it this way too. The range that they're going to give back, like to here, let's say even to 7-1, or we can work with probably a 22 point range, but like in general, max range is probably like close to 32, 33 points. Yes. Okay. That's probably the same range that they would have capped on the downside. Okay. So do you see what I'm saying, you guys? So I don't think the move is much different. If they had pushed the downside, they would have likely pushed it to 6-8. Let me clear this so you guys can see what I'm saying. So let's mark 7-8, 8-1. Where's 7-1? This area here. We'll mark 5-1, and then let's mark our 4-6, 4-7 area, because these areas are calculated. Then we'll mark 68, 32, 28, and 22. What I'm saying is I don't think the range would have been that much different, to be honest with you. Okay, so probably upside would be around 22, 23 points, specifically off 5-1. I'm not doing this exact, but just to give you guys an idea. Okay, so this area would have netted closer to 6-8, 2-4. That's not really max range, correct? Like off that range in lows, that's not really a max range, but it's just to kind of give you an idea of how either trade would go, and they're going to be aligned around the exact type of risk to reward on both ends, like in terms of range. So off 4-6, this should be aligned to 2-2. Do you understand what I'm saying? So where they're stalling right here, based on where they held these lows, is extremely calculated to them doing the same thing where they would hold 68.22. Does that mean that that could be a stalled point around 6871, 75, 6872? Yes, right? I would say that 5-1 area is a little bit more calculated though, which is why they could take this back and try getting to those highs. Okay. If we look at this whole range from where they sustained, okay, to 7-8, maybe we have closer to like 30 points. Okay, this would be closer to 68.17. Okay, I want to show you guys something. Obviously, getting to 6.878 really helps us, right, in terms of odds. If they did the inverse on the downside, what would that have done for us? Obviously, increased risk. That would have taken us back to where? Where are these areas aligned to? You guys have to think about price in terms of highs to lows to open to close. Okay, put that in your mind. So think of your highs and calculated ranges. So our 7-8, 8-1, they should be aligned to your lows, your highs, your open, your close. So this structural hold right here above 6846, that's not a coincidence. That mathematically should align to, had they broken that range, had they broken 6846, had they done the inverse, like your range that you net is, it's always calculated. This range that they're netting right here should have netted the same exact range had they triggered 68, 22, 24, 28. Does that make sense, you guys? Your price action in between here, okay, this here, this should be equal to what would have happened had they broken here. Okay, it has to be the same, otherwise that's not calculated. What would max range be equal to? So max range, I would say, would be off 68.46, okay, and off maybe hitting the 4.8 area. What is this equal to? Around 68, 16, 68, 16, 25. What is this area equal to? I want to see if you guys are actually thinking about this in a strategic kind of way. What would this be correlated to? If they had pushed this to 8.1, 33 points, okay, and pushed down beneath 4.6, 33 points, because that's your max upside, this would be your max downside. What would this be correlated to? Why would this increase risk? What does this take us back to? And specifically off 4.6. So 4.6. What are those areas down there? $68.50 close at 338 is definitely enough to keep this in play. Nope, they are neutral, but what are these areas in specific? Think about what I just said. Your open, your lows are aligned. Your highs and lows are always aligned to your open and your close. None of that is ever a coincidence. Do you see what I'm saying? So obviously, if they had brought it back down there and they did that, that's going to trigger what? Like you have to understand the logic behind the trade. It's not just about range. You have to understand why that would be the range. Okay, so where did we open the real-time session today? What is that aligned to? You guys. Your downside risk. What would that have been aligned back to, and why? And we generally use 33, 34 point metrics anyway, but what are these yellow ranges, guys? What would this have been aligned back to? Had they broken 68.46 around 230, 236, 238? Had they not pushed back and cleared 6858 right here, which was a very, very, very important, yes, it would take you back to your open and close, right? So do you understand how these structures, these price points, these increments are also aligned in risk reward format back to your open close? Do you get what I'm saying? This would take you back there. So that's what would have increased risk. So in the future, if we start failing 68, 61, 68, 78, 71, then we know it's essentially, you're going to put in your mind that 6846 failure could essentially take you back where? Back to 6817, 6816, 6812. Do you see what I'm saying? It takes you back to those structural open and close. It's never a coincidence. Like the range that they implement is always correlated back to that. Okay, so, and we'll know whether they want to break that based on how much range we get. So sometimes is less range better? Sometimes it can be, because that sometimes it could technically also limit the downside risk. So maybe if they start stalling around here and they don't want to take it much higher than that, that could have implied that they might have wanted to reduce volatility and maybe only trigger 68, 24, 28, 22, keep those upper core ranges. Does that make sense? Like maybe they didn't want to do the full downside trade. Maybe they really wanted to just, okay, so off where they're currently stalling, which is the 7-1, 7-2 area, that's more aligned with 68, 22, 24. Does that make sense? So where they're currently stalling right here, okay, in here is more aligned with 68. This area here, this range is more aligned with 68, 22, 68, 24 off 6846 and off that 68, 48 low. Does that make sense? Like this is a perfect example of sometimes going lower is better and sometimes going higher is not really ideal. It's kind of a measured basis. So from a measured format, stalling there is not the absolute worst scenario. That would be a controlled risk. Okay. When you head higher in a short period of time, what does that usually do? It increases what? So if they were to break 7-8, what does that do? And 7-8's a very, very calculated price point for us. That's our 346 point interval. It's an annual range. What does that do for us? It increases what? This actually makes a lot of sense why they're stalling 68, 71, 72. Because that's correlated with 684, 846 hold, and they're closely linked to 68, 22, 68, 24. Yeah, it increases risk and volatility, right? So it's nice when it's happening, but it could increase the risk. Does that make sense? I really hope this is making sense to you guys. So I would say with confidence that a 34 point range, let's say, I'm just going to use 34 points because it's an easier way to measure, like 33, 34 points, would have taken us back to today's open. If they had failed, basically here, I would imagine that this failure here, okay, would take us back to 68.12, which is today's real-time open. And specifically off here. Do you see what I'm saying, you guys? I really hope that makes sense, especially off like the 4.7, 4.6. So I can confidently say that our 68.46, 68.47 is definitely a calculated spot. And we calculated it yesterday. If you missed the session yesterday, go back and rewatch it or read the notes, but 4.6 was calculated. 4.6 is also the 256 point range. It was also the intraday calculated points that we looked at in terms of max range. Remember when they brought range down yesterday and then we recycled it back up? It netted back to 68.46. So I knew for a fact that that was the max range. Like they couldn't take it any higher than that. So, and I think this also gives us the same theory. Like maybe they are capping range there because I haven't measured this, but let's see. So off here, 28 points. 28 points is more linked with 68.20. Okay, 68.18. Hopefully that helps you guys a bit. Because I think it's not just about understanding or taking a trade, but like understanding why those happen. So, okay, us tagging 6.8 here is enough to maybe keep it in play. Not tagging 7.1 can keep risk on. Okay, so not having a 7.1 break here can keep risk on for the 348, 350 period. So I would say with confidence that obviously our 350 period, you probably need to get some structure breaks over 687, 175, 6872. Okay, to keep your odds in play for what's our final targets on the session today. Final targets on the session today are what are the final targets on the session today? I always watch 54, 55. So we'll watch those today. Odds today were exactly until close, so, and then there was some odds at 414, so I'm gonna likely stick around for the close. How do you guys, what do you make of this price action here so far? Do you think that our overhead is perfectly aligned at 7-1? And the holds of 6-4? Like, look at this. They're holding 6-4. What do you make of the 350 stick? 6875. It's almost the exact same range that they gave here. So it's funny because that was the period to try resetting the 338 stick. Do you see how they're like almost the same range? So it's slightly progressive. Okay. What does this mean for odds for close? Basically, what point in the day do we have odds to hit highs? Specifically, if they can keep 6-8 and 7-1 ranges intact during these periods. So I would say this condition was met at the minimum condition of 6-8. Same with 350. 354, 55, however, have way more pressure to break what? Highs. Okay, so we can trigger high of day at what time? Based on where they're holding. They're holding 6-4. Based on where they stalled, they did tag 7-1 even though they didn't close above it. They did close over 3-8. They did close over, or sorry, 6-8. They did close over 6-8. What condition has to be met during this period here? And what point in time could they trigger high of day by for real-time session? If they don't decide to keep this pinnable, because this whole area is the pinnable box, right? If they break above 7175, then they're accepting the volatility above, okay? Which is directly correlated to these areas now, okay? What time can they trigger high of day by, you guys? If they really want to keep this going. Highs are in 6876, 6877, 6878. I'm gonna set that for 1 minute so if you guys can vote. Yeah, probably right at the close because some of those structures flip right at 4. But that would be the condition that they do what? Can you guys vote on that poll? Because I only set it for a minute since we only have a few minutes left till the session closes today. It's very clear. If they don't break price, I would say by the 55 stick, okay, we probably have very low odds that they're going to break highs. That would keep odds pinnable between 68, 58, 68, 66, 68, 71. Does that make sense? If they're able to clear by the 55, 56 period, then we have some pretty good odds to keep it durational till close. Anything in between these areas here is enough for the market to just pin price there. So pinning at 68, 61, 68, 58, none of these are bad areas. They're kind of just like within the means, okay? It's just more if they want to push risk on or take on a higher range of volatility into Friday, they would push these ranges into the close, okay? Yeah, it's not, I'm not using it just based off a 15-minute chart though. I manually calculated these, so it's not based off a standard time frame, if that makes sense. Market in general though, usually your 355 period in general, you could use that as a daily rule, can dictate or decipher the direction it wants to take. So like I'm reading this, like you see how 54 hit 6-8 but not 7-1? That immediately triggered me as, okay, there's volatility, okay? 5-5 not breaking 7-1, but breaking back beneath 6-4. Again, this triggers volatility. This is a reduction stick. This stick here would have easily been enough to have pushed this over 7-1. Do you see what I'm saying? This would have probably triggered back to high of day. Look. Okay. So I would say that the 350, 455 stall, they're trying to keep this within this range in here, like the pinnable box range, beneath 7-1, but above 4-6. Okay, likely closer to between 5-8 and 7-1. The only thing is odds for today were until the final minute of the session, which is why if they want to keep that kind of reduced in the overall range, they might just wait for the final minute of the session today. And that would make sense if they only have so much range left to work with, but too much time. Because if they push maybe 68.75 at 355, then that could really increase volatility by 5.6, 5.7, 5.8, 5.9. Does that make sense? So we'll see here. I figured that if they're going to come back and retest, if they stall at 350, 455, they're likely trying to delay odds until that final minute of the session today, which would be here. If they want to keep this pinned within this box range, which would be this area here, then the market doesn't really owe us anything. Okay, this, if they keep it within this area here, that's kind of just keeping us at a standstill. But I think they have a slight odd of retesting, only because they did trigger 6-8 at 3.8 and at 350. So we'll see. What time is it right now? Also, heading back to the channel isn't even the worst case scenario too if they want to digest, but what did you guys vote? So I figured highs could maybe be in if they stall 350 for 355. Majority voted 7.778. 7.778 for real time might be hard though, because they didn't clear 7.175. But I mean, we'll see. This kind of delay right here and stalling, I would say they're trying to keep this closer to this range in here, closer to like probably the 6.8, 6.6, 6.9, 7.1, and the odds were at 4, so it could also be like that push after the real-time session closes if they decide that they don't want to push in real time. Staying closed in this means area, like between 5.8, 6.4, would kind of keep both ends applicable still. And that's probably what they do based on where they ended up opening today. So we'll see. Where do you think they'll pin this, guys? At I would say the 4 o'clock pin, since 4 o'clock is the actual flip. Where do you think they'll pin the 4 o'clock pin? So 68, 61, 75, that could easily keep volatility open here. Okay, so like I said, if they keep it within this box range, especially after stalling 7-1, there's some good odds that they'll keep this whole box area alive for the next session. And they might do that considering it's heading into Friday. Sometimes that's the case if they want to just kind of delay range or delay, compress, I guess, the close into the end of week to make it more pinnable. 68, 71, 75 stall and 68, 61 pin for the real-time session. I would say that that's going to keep us a bit sideways. This can still keep odds open now for end of week with 68, 78, 68, 81, 68, 84 being an obvious overhead. 6846 is going to act as the support area that could head us lower. with calculated ranges being closer to our 68.22, 68.28, 68.16, 68.12, and 68.14. I think risk really opens up on failures of 68.06, which could give us the retest of 67.88. And something else I noticed too is you see how we were 2 points off on each end today, like above 6846 and beneath 6878. I noticed the same thing on downside. So you see where they held overnight yesterday, right here, kind of like this range in here, and then yesterday's range back in here. They left some downside risk, okay, above the zone areas here. So, and I would say probably close to like 4 to 5 points, okay? We could probably use that as a means of risk to reward on both ends. So that zone area is still technically applicable if they were to recycle downrange tomorrow for the 10th flip date. 2-day flips over tomorrow, so that 2-day 3-bar flag. Usually when a flag flips over, okay, like if it flips over and it starts, like I would say a 61 pin is not the best pin for continuation. You would have needed at least 68 or 71. So if we had some sort of what's the word for that? What's the word I'm looking for? Digestion, I guess, of price action over the last 2 days and 2 sessions, it would make sense that it would happen tomorrow, okay? Because this candle flips over, and typically when you see that much range in one single stick, then yeah, and if anything, I would rather that happen tomorrow than to happen on Monday. So yeah, it could keep downside alive, but I don't really know if I would consider it downside or just kind of like heading back to a means, because remember 6722, 6744, 5866, 71, 81, these were all areas that were enough for us this week, right? Like if they don't expand 6820s, that area was enough. So and this structure right here on the daily, this is a perfect structure for what kind of structure is this? They could easily have like a nice little reversal. So our weekly ranges were around this area here. So if we get a big short tomorrow, I don't really think it'd be like the worst case, but it keeps that 10-day, do you know what I'm saying? Like it keeps these structures like obviously still alive. And like I think it's because they've hit so close to the mid supply, and this has until the 13th. So that kind of leaves us with a lot of room to work with. Okay? Anyway, I'm going to wrap this up. I have a lot to do. I will be putting out probably 2 reports today because I already drafted the one yesterday. Do you guys want it though? It was drafted yesterday, but I didn't publish it. But it's basically everything we talked about yesterday anyway, and which is literally talking about the 68, 71, 78 targets. But I mean, it already played out, so I feel like it's, I don't know. When I looked at it this morning, I was like, I don't even know if this is even worth publishing now because we already talked about it yesterday and the day before. But if you guys want it just for review, then okay. But I'll set some end of week conditions. I think now that we've seen how the session played out and that we didn't close above here, it makes it easier for us to like get a better sense of direction, right? Like, so I would say 69.20 odds, while they could still be applicable by the 13th, they've definitely reduced a little bit considering they stalled 6878, 6881. Does that make sense? And they could start now recycling range, and that's usually what happens when you have such a vast amount of range in such a small time frame. Yeah, and then of course they'll give us some sort of headline, right? That's going to give us those odds. So they'll do whatever they need to do to get price to where it needs to go. So if they need a headline to get us there and a fake ceasefire or something like that, or a negotiation, and they're already talking about Lebanon and Israel having negotiations over the weekend. So those all could play into huge factors for what could happen on the 13th, which is the final day ahead of the flip for the 14th. So there's many things that could come into play that we can factor in as where, why, how price is moving in that direction. So, and today, even though they had headlines, they didn't push it up and they didn't push it down, and that's because these are calculated ranges. Market only moves, I swear, when it hasn't met its price point. Because it already met its price point, I that's another reason I could tell that they likely weren't going to take this higher, because they launched that news and it didn't even react. It barely reacted. This was it. So I was like, oh, that's it. That's pinnable. Does that make sense? Because if that news is it only pushed it down to here to 4.8, then it's pinnable. Because that kind of news was the same kind of news that pushed us 200 points. So how does that make sense? Do you get what I'm saying, you guys? Like, they're they only utilize it or leverage news to their advantage if they haven't met the area of price that it needs to be in. That's how I know that all of this is scripted. It's all predetermined. It's not. I don't think any of it's ever a coincidence. So, whereas if we were trading at 60, let's say we were trading at 60, 68.81, 68.78 when that news came out, they would have probably pushed it back down to here. Does that make sense, you guys? Like the way that price moves and when news gets released is based on where that price is currently trading. If it's already met a specific calculated point, then the amount of volatility won't be high. So I could tell that when that news came out and that was the only move that they were given and they held 4.6, I'm like, they're keeping this within those weekly intervals because they know that, upside was met, downside was met. So a lot of it is all formulated around where they want price to be or where it needs to be. So, and I think we had a pretty good read on that this week. Okay, I will see you guys tomorrow. Sorry about the other session with that family that we discussed, but hopefully we can do it tomorrow. If not tomorrow, maybe we'll just do it sometime this weekend. I feel like that might just be easier for some. It's very hard to host a session at like 5:30 or 6 a.m. my time ahead of open. So if not tomorrow, maybe